Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, guys. All right. Jeez, oh, wait. What the hell? You're not even hearing the music, are you? Oh, my gosh. This is really weird. I thought that Windows fixed these problems. Jeez. That was too loud. All right. That's wrong. Oh, we want this one. There we go. Can you hear the music okay? It's just like, I don't know. I think that I woke up grumpy and like my vibes I'm sending out into the world are causing problems with my computer or something. It's just really weird because everything is like messed up here. It seems like, like unplugging and plugging back in monitors and stuff caused everything to go to the wrong screen. So I'm pulling this over here. Let's fix all this and then I can sort out what's happened in the market because it does look like that it is moving here. Grab these other windows. Okay. And put the error window over here. That's nice to have. And these order windows. All right. Whenever there's news, I'm late. I really can't explain why I'm as late as I am. I think I was like being ADHD and dreaming this morning or something because this is a little weird. All right. Well, so what did we get? We had US PCE price index year over year 3%, month over month 0 versus spot 1. So that would be good. Initial jobless claims 218 versus 218. That's good. Core PCE price index spot 2 versus spot 2. Consumer spending spot 2 versus spot 2. Personal income spot 2 versus spot 2. Personal consumption spot 2 versus spot 1. Huh. Good luck today. Don't trade too big. I feel like that I should be cautious here because market is being a little weird, isn't it? Let's come back to the charts and do our analysis here. ZN, about where it was, maybe slightly on the downside. So that's the first thing is even though we're selling off right now, that's, we're still up there. S&P 500, looks like they're, well, so this line is when we started yesterday, huh? So we kind of started out okay, and then the market sold off. Now, since then, we've kind of slightly been raising. Maybe I should put the ATA thing on here to note so that I get like the day session and the overnight on this one or something like that. I can do that in a bit. Oil, some reports that they are going to get the output cut. So oil is rising because of that. Gold and silver maybe slightly on the downside because of rates. And copper trucking along but doing okay. There was some numbers from China overnight that weren't very good, but it looks like copper is maintaining for now at least. Bitcoin just kind of doing its thing, not really doing anything too terribly interesting. And the dollar, when we come over here, the dollar did jump on the news, bouncing at 103 from the overnight support. Just notice your news scroller is missing. Yeah, I haven't carried that over from the old machine yet, unfortunately. Part of the problem is I had this thing set up that would, every time that you guys made a comment or a donation comment, that it went into the scroller. But then it happened very often, and part of that was built into the thing that would read out what you guys were saying to me, like every comment as well. I don't use that as much because we just chat a lot more. And actually, I don't know why I stopped doing that now that I think about it. Maybe I should just bring all of that back. But I don't run that script anymore, so it wasn't doing anything. Maybe I should make a different script that puts the same thing that we got in the back there and scrolls that instead. I mean, I could program it to do anything I want, right? I think what happened here on my computer was yesterday I opened the computer up because one of the fans was running higher than I thought. I think it's because that fan is actually plugged into the pump, and I guess it's not sending the correct power to it when things ramp up. So I ordered a new cable and I'll get that in, but then when I did that, I didn't completely plug in one of the monitors all the way. So I think that because of the way that the computer started, didn't order the monitors in the same, and that's why Jigsaw didn't open up on the same monitor. That kind of screwed up a couple of things up. The Elgato lights, they just will inconsistently stop working sometimes. Maybe I should just replace the Square one with a newer generation one that they don't have that issue. So that was kind of where all, and then the sound was also like on startup, it didn't. You wanted to go to the monitor instead of the default sound stuff they had set up. So that's probably what all that was about. Okay, so that's where all my problems are. I think the reason I woke up kind of on the wrong side here was I'm thinking about this Elon Musk thing. Can I talk about that? I'm like having so many thoughts off of this. So yesterday, Elon Musk was being interviewed by what is his name? Sorkin? Isn't his name Andy Sorkin or something like that? And it was a bit of a wild interview. So I think the moment that everybody is really focusing on is he said that Bob Iger was basically saying say different things or change things about Twitter or we won't advertise with you. Andrew Ross Sorkin, that's right, Andrew. And Elon Musk told him to go F himself. Because like, I'm not going to modify what I say or make the platform less about free speech for your money. And I totally applaud that. But he was so defeatist about it, you know? I really don't think that you should admit defeat before you fold, right? But he was kind of fatalistic about it, that these companies pulling their money out, the advertising out from Twitter was basically going to destroy Twitter, and there was nothing he could do about it. You know? He was very fatalistic about it. So now it's really weird to watch people's reaction to it. Elon Musk is not the best speaker. He pauses a lot, especially when they're interviewing him. He has to pause. He has to collect his thoughts. He speaks in a very monotone voice. I very much think that Elon Musk is ADHD autistic. And I think one of the problems that people will have is that some people aren't actually listening to the words that you have, right? Some people, they need the context of why you're even talking in the first place, and the intonation of your voice, and your body movements, and the reaction of other speakers to you to actually interpret what you're actually saying, right? That's the way that really normal humans work, really, when you think about it. Because again, you get that frontal cortex, it's all there to help you interpret social situations quickly. That's why it evolved. And so some people that aren't as, they aren't engineers, they aren't as into the logic and the argumentation side of things, if they don't have those extra cues, it sounds like word salad to them. Because I saw a lot of people saying like, oh, he wasn't actually making a point. It was just words. It was just him falling apart is what they're saying. Whereas people on the right and people that are kind of more engineers and are listening to him see him kind of it's being a defiant stand. I know that Twitter is going to go under, but I'm not going to compromise free speech on the platform or modify what I say in spite of that, right? Elon has Asperger's. I think so. I'm pretty. I mean, he's said as much, but I'm going to bet that the degree and nature of his autism, like his level 1 autism, is probably not as well investigated as it could be. Like, has he taken ADHD medication for it? I don't know. Maybe he has, maybe he hasn't. He's probably not going to discuss something like that, but I kind of get the impression that he doesn't, or at least he's not right now. Right? He said some things that I was really like, I really... So the first thing was, kind of the way that this started was he interacted with a comment that basically implied that the Jews are trying to undermine society. Is basically what they were getting at. There's these people on the right. You don't understand that there's people on the right, and they tend to be either like the crypto Nazis or the really super religious right that they don't like Jews, just like the far left doesn't like Jews, which is really strange how it all kind of comes full circle. And they think that we shouldn't be involved in Israel, that we should just let them to their own devices and let the Jews and the Muslims kill each other is what these people think. And they think more broadly that Jews are like socialists that are using cultural Marxism to destroy Western society is what they believe. And Elon Musk interacted with a comment that was kind of on that vein. And he later came out and clarified that's not what he meant, and that he didn't mean to be anti-Semitic. What he was talking about was that people have a certain ideology that comes from them being historically victimized, and that gives you an affinity towards other groups that also claim to be victims. And if you go and you support and you give money to every international group out there that claims victimhood, some of those end up being Hamas terrorists. And they weren't, very discerning about that, and they're giving money to Hamas terrorists. And that's what he was talking about, supposedly. Or that's what he claims. And I'm not saying that I don't believe him. I'm just saying, like, I was a little confused when it was going on. So now that I'm hearing this, felt like it was a little left field, but okay. Good explanation. That's what he was talking about. So he started out with that, right? But then he started going into this stuff that was like, what I see is a bunch of people doing evil and wanting to look good instead of, doing good and not caring what people think. And so many of his comments there, I was like, right on. Because before, I was like, well, I don't know what's going on with him. I think sometimes he is not on. Of course, anybody's going to make a mistake. He's just a normal human being, right? But after that speech, I'm totally with him. Like, I know that he's a human, and I think that he makes really, really big mistakes. And he's probably going to make those kinds of mistakes that I notice autistic like people will make. But I completely believe now at this point that he is genuine and that his heart is in the right place. Like, this idea out there that Elon Musk is just a greedy capitalist and that he's trying to do everything that he can to just make more money. I don't buy that one bit. I think he is genuinely concerned about free speech, and that's why he stepped in with Twitter. And he's genuinely concerned about the Hamas conflict. And so I see a little bit of myself in there now, because I'm very, very upset about what happened in Israel. Just that it's just a horrific atrocity, and then seeing people come out and like march for Hamas and Palestine is just absolutely disgusting to me. It bothers me so much, man. It bothers me so much. Are you gonna take that long entry? Hell no. Hell no. And but not just that, but I've kind of been like, well, I don't know what's going to go on with Twitter. I guess we're just going to kind of go and see. But now I'm kind of like, oh, I want Twitter to be successful. I want to do anything that I can to help that platform out. It was funny because one of the things was that when he was talking specifically about Disney's CEO Bob Iger. So there's been this thing. There's a lot of YouTube channels that they follow the Star Wars stuff, and there's a lot of Star Wars rumor channels now, and just other channels like this. Some of them are crazy. Okay, so I'm gonna tell you the name of some of these channels. Actually, I don't think I can remember the name of any of them except for Overlord DVD. And Overlord DVD is full of shit and is crazy sometimes. Just to warn you, I don't like everything that he says, but they're always following rumor about what's going on at Disney. And there's kind of always been this thing about, is Bob Iger like fully woke or not? And sometimes they come in and they're like, Bob Iger is going to terminate the woke crowd and all of these things. But the reality is that Bob Iger was the one that brought the woke crowd into Disney. And here now you have a specific instance where Elon is saying, yes, he said to me, do this and this and this, or we won't give you advertising dollars. He mentioned Bob specifically, and he said, F you, Bob. And it was so weird because I was on Instagram this morning. And you know how Instagram is pushing their Threads platform. And so you know that most of the people that are like posting on Threads are anti-Elon Musk and anti-Twitter. And one of the threads that it decided to show me was, well, I don't see how he did it, but it looks like people have been that Elon Musk was able to unite people in favor of Bob Iger. And I'm like, I don't think that's what's happening at all. I think that Bob Iger is probably one of, if not the most hated business people on the planet right now. And it just makes me hate him even more. I loved his comment about let the earth decide. It was so brilliant. Well, so what did you like about that so much? Because the thing is I totally get I think what he's saying is, well, I'm going to do what I think is right, and we'll let the public decide what they think about it, right? The problem is that I don't think that the public is going to completely come down on his side. I much liked more his comment that, like, I'm okay being hated. Now that comment I really identify with. I have absolutely no problem being hated because of something, that I said, if it's something that I really believe, So I get these problems, like sometimes with my kids, this will happen from time to time, and it's an ADHD thing, but it happened yesterday. Kid was, we were talking about something, and he asked a question that was basically like, well, but what about this? And I said, well, actually, it's 100% that. He was trying to challenge it. And what I said was true, but it was very offensive to him, and he walked out of the room. But it was true. I hope that my kids understand that, I just say things sometimes, and I don't really consider a whole lot about how it will how it will affect people's feelings. Okay, we must be getting news about oil here, because oil seems to be moving around and everything is... Oh, this is... The market is reacting to Fed's daily comments. Anyways, but I hope that my kids understand that ultimately I always have their best interests in mind. And if I'm telling them something, it's because it's something that I think is true, and something that I think will help them in the long run, even if it hurts their feelings in the short term, But, I kind of identify with Elon Musk saying that it's just like, well, I talked about things that I really believed in, and in one instance he kind of made a mistake and he later clarified, but he doesn't feel like he has anything to apologize for, in terms of, like, because some people seem to think that he has this ideology that's abhorrent and he needs to apologize for that or something else. So let's dive into these dailies comments here real quick. I don't want to repeat the mistake of the 1970s. People's fear of a recession has faded into the background. Currently on the way to temporarily reaching 2%, but we are not interested in temporary price stability. Latest inflation data is encouraging, but we must not prematurely declare victory. The need to be prepared to either raise rates again, or if necessary, say tightening cycle is complete if that is appropriate. We need to better understand what is happening with the economy and inflation. We should take our time now and remain vigilant and act prudently. Okay, so that was a very strong pushback against the bubble up that we had 2 days ago. That's definitely a sell. I don't know if I can jump on it now. I might be able to, but I would probably need to get a better price, because this does really seem to be like a situation that could continue. Although, I gotta look here. Continuing jobless claims surge to 2 years highs as initial claims in California are chaotic. Fed's favorite inflation indicator cites the 30-month low saving rate tick higher. Do we really have a new record high? Well, no, not a record high, but it's pretty high for this early. I was thinking about this the other day, because part of me I feel so torn. Part of me wants to be everything for everybody and to really knock this out of the park sometime, become a really big YouTube channel and become very influential and just conquer the world, sort of a thing, right? And part of me just wants to be left alone, you know? And you know, there's part of this thing which is like, if the stream gets too big, that kind of changes things. And my intention is to be a small niche group. So I was thinking about it and I was like, I've got the wrong approach here. Because I'm, you know, this is like when there's a Reddit thread and I'm like, is somebody going to mention me? Right? Why doesn't anybody ever mention me? No, I've got it all wrong. This is Fight Club, right? The first rule of Fight Club is you don't talk about Fight Club, right? We should be going through, okay, next time we have a Reddit thread, like, who's a YouTuber that you really like? And I'm going through there and it better not be anybody talking about Speculator Seth, because we don't talk about Speculator Seth, right? That's the approach that I really should be taking. Because it is actually really more in line with what I'm saying, because it's not, because the first rule of Fight Club is actually, the first rule is meant to be broken, right? But it also, at the same time, kind of cements this idea that we are a niche group or brotherhood and don't necessarily need the people, right? People will just come because that's what they're looking for. I find this club to be the end. Yeah, that's the whole thing, is that the first rule of Fight Club was meant to be, was to teach people that the rules are meant to be broken, right? But it was also to create a culture that this was something that is underground, right? So it's very, very clever. And I'm like, oh, I should be taking that, because that is, we are supposed to be underground. And you probably will break the rule, but I'll be watching. I'll be watching and seeing who you was talking about. Okay, so there's our pullback. Fed's Dali's comments started to come in at about around this 110 area. There is a big node at 30. There was a big iceberg at 30 that they kind of blew through. So, sound like Andrew Tate. You know what? Andrew Tate has gone off the deep end and isn't talked about anymore, and I'm kind of glad. Because, you know, there's lots of people like Elon Musk. Do I agree with everything that he says? Do I have no, of course not. But I believe that overall Elon Musk is a positive force for the world. And I hope that he gets better. He's only 50. He's probably got another 50 years left. And I hope that he does many more great things to come. Okay. I don't feel the same way about Andrew Tate. Yeah, there was a couple of things that he said that I think needed to be said and that I thought were really interesting. But overall, I do not believe that he's a positive force in the world. And I don't want him to be a famous person. And it really bothers me that there was so many people that were like looking up to him as a role model and things like that. No. We're talking about the Federal Reserve. What is she? She's I don't know. I think she's just an FOMC member, but I don't recall at the moment. But she was making comments. It was a Fed speaker making comments and pushing back against the comments on Tuesday that caused a market rally. So if you think about it, well, obviously fundamentals aren't what actually pushes the markets. But if we were to take that approach, sometimes it might be useful to just think about it that way. here in ZN, this move up was kind of, let's see, that's Monday, Tuesday, Wednesday, Thursday. This move up here was driven in part by those comments. So let's fix this. I'm gonna come in here. There's this indicator that I think is kind of is pretty well done called AMA opening range. If you go to Lizard indicators, I think that you can go on there and download a couple of their indicators for free, and then after that, it's only like $150, and I think it's the largest, best done NinjaTrader indicator suite, because it has like more advanced indicators. So, you know, the thing is some technical analysis, I'd say that there is something to it, but like the edge has been taken out. But you want the more advanced indicators, you get it from this. So they have this thing that's like opening range and pre-session. So like, and you can kind of change the colors and stuff. So if I just apply this now, see how it will draw this little line about where the, what the opening range was. Kind of cool. How do you get the cumulative delta? What do you mean? So are you on NinjaTrader? You trying to do it on NinjaTrader? Maybe I need to change the session template that I'm using. Oh, well, the I don't know if I should go too deep into that one. He was having some trouble with people at school, and it was kind of some things that he had, you know, some mistakes that he had made earlier that are kind of why that had happened. And I was kind of trying to explain to them how you avoid having those problems. And he was like, "Oh, is that what he did?" And it was like, "Yes, that is what you did." Oh, okay. So on this chart here, Josue, the thing down at the bottom, that is not cumulative delta. That is the 2 and 10 year spread. So what it is showing is that the 2 and 10 year spread has been steepening over the past 3 days. That's what that means. I'm still thinking about how I want to deal with this. I think that I want to, you know, after the stream, that I will go and look at the old charts and grab the session templates. Because it's the way that this chart is, it makes it hard for me to see. I can see this where the volume profile starts is like the beginning of the extended session, and where this chart starts is like the beginning of our session. But then, you know, what is our session and what is the overnight is not very easy to see. And yeah, I do kind of feel like that stuff matters a little bit. So okay, so now we're back to 110. So the market did very much react to Dali's comments, but they retraced it. So my instinct on that hey, this could be something that sell, but they're probably going to pull back first, was a good instinct not to touch that yet. They are pulling back a lot more than I thought. So I'm a little bit worried about that one. The chances that they completely retrace this news and or push higher are kind of there too. But this comes back to when I read the news, I don't understand why they sold that. I don't understand why they sold that. You know what the deal is with that? Is ES correlated 1-to-1 with SPY? No, it's not. And if I got SPY data, I would be able to graph that for you. So if you have CQG data and you're buying the data for the indexes, like the tick index and so forth, then you would also get the SPY index. And then you would see the difference between the future and the index. And that has a basis difference to it, just like there's a basis difference between the futures and the cash treasuries. And you can trade that basis. And a lot of algorithms out there take trades based on that basis. Like if the basis difference between the two of those gets too far out of whack, that's when they start buying and so forth. Octavia says, fill the rollover gap. Are you talking about the one way back down at like 109.08? I'm getting more comments from, this time from Feds Williams. Pierce Morgan is such an a-hole sometimes. So Pierce Morgan interviewed Kyle, what's his last name? The guy that was involved in, defended himself and killed 2 guys. And Pierce Morgan starts out, "You've killed 2 human beings and wounded a 3rd. I just wonder how that feels." What the F? What the, like, I think that Pierce is sometimes he just wants to be a tough interviewer, but it's very clear to me that it's also like he will have opinions and he will kind of hide his opinions behind the facade of I'm just trying to be a fair and tough interviewer. But that's just being an asshole. It's so disrespectful. Oh, well, yeah. Were you here when we talked about I built a new machine? So we did buy a new machine. Put it together over the weekend. I'm sick of all the Fed speakers. They should be allowed to speak once a month. Well, the funny thing about the Fed speakers is that, like, I think a lot of this is robots, because you'll get these times when a Fed speaker will talk and they're saying significant things, frankly, and like the market just doesn't care or understand and they don't react to it, right? But then as soon as a Fed speaker comes out and they say something that the market reacts to, now all of the robots and all of the traders are all paying attention to Fed speakers. And so now every Fed speaker that comes out and talks causes a lot of movement. Like, I think this thing with Feds, well, I think this whole episode of Fed speakers this week has kind of been nonsense, right? Like, Waller, I don't think intended to signal to the market that interest rate cuts are about to happen, right? I think he was just going through the scenarios that they've been enumerating to us for a while. If this continues, then eventually they'll reduce rates back to a slightly more reasonable level. And if it doesn't and inflation comes back, then they'll raise interest rates. And so he says that, and then the next Fed speakers have to push back against it. Yeah, How much was the build? I think it was about 1,000. I didn't go as hard as I could have. I decided to kind of just be gentle with that build, and if I really wanted to do something crazy, do that later. Because I realized that the extra power is not really the thing that I'm super interested in. Like, the first thing was to just get to the newer platforms so that I could use Windows 11 and have a little bit more processing power so that I never run into these situations where I feel like the applications aren't as responsive as I need them to be. So that fixes that. You know, I would like to have multiple hard drives and more RAM and things like that, but I don't actively need them right now. So I can do those in a couple of months. And, you know, I can upgrade to a better processor later down the road and things like that. So. And the other part of it was to get 2 machines and to have an interact. So I did all that. Anyways, on the Fed speaker thing, I definitely feel like I'm in hands off now. Like, I missed the opportunity I screwed up today. For whatever reason, I was slow getting ready. Too concerned with what was going on in my head, and I wasn't here on time. Didn't understand what was going on. Didn't have myself positioned, and now the market is kind of in this vengeful mode where you're probably going to get screwed around with a lot. How many? I have 3 monitors. Sometimes I'm tempted to add more, but then I'm like, yeah, but where would my camera go? Where would my speakers go? Really, I probably need a second computer setup. Which is kind of funny because I do have 2 computers now. So I could do that, right? But I have room. I need to do something about this huge hutch behind me. I just need more room. Maybe I will move someday. Like, I used to think I will die in this house. And now I'm kind of thinking, well, there's a couple of things about my needs that have changed. And it would be nice to move a little bit. And I don't care as much about being so close to my parents and so forth. So, do you think AI, well, hasn't it already? You asked that question before, First Last. You've asked me that question before, haven't you, Salim? Or is it we just haven't talked about that? I mean, it's a subject that you guys love to hear and talk about, right? AI has already overtaken trading. The edge available for the rest of us is very, very limited. If they went and they passed some law that basically said no algorithm assisted trading, that all orders had to be placed by you with a click, that would be a big advantage to us. If that happened, I would probably be able to come in and make a lot more money from trading, like instantly overnight. It's never going to happen, but I guess we can dream, right? I'm going to try blowing my nose. Don't call me Salim. Are you sure? I think you are. You acting like Salim. How do you focus with a lot of DOMs, or do you? That's a good question. Dude, Jose, this is the first time I've seen you on this stream, and I have to say I'm already impressed. You're asking really good questions. It shows that you're really paying attention and that you have a mindset that to look for the right things. So I can't see every little number that's going on here for sure. There's too much information. I always joke that like the way that I trade is get as many numbers up on the screen as possible, and then when one of them catches your eye, you click, right? What I do, if I can, where is, oh, I don't have it turned on. Hold on a second. Hang on a second. Where is it? There it is. Okay. So what I do is I'm primarily looking right here. Okay. My eyes are right here. I'm looking at the two inside, what's trading on the inside, how the bid and offer are reacting to it, and maybe what the next few levels are doing as well. Okay. And then these other ones, I'm just kind of seeing out of the corner of my eye. I'm just kind of seeing them out of the corner of my eye. So I can see, okay, this ticked down and I also caught movement over here. So they all ticked down at the same time. Right? I can also, there are correlations. So I can see right now that the 5-year and the 30 are a little bit more prone to be down 2 ticks, whereas the 10 is holding here. So, yeah. Now, of course, I'll look over here for individual pieces of information when I need them, so that then I can come in and I can say, okay, is there something going on with the spread? There appears to be some flattening between the 5 and the 10, right? You can see 5 and the 10, they're uneven. So there is some flattening, but it's also the 30 is down more than the 10 for some reason. So there's some flattening, and it appears to be happening mostly at the front end of the curve. Right? So then I can start to come in and look at some things in the 5-year and say, okay, so if the 5-year is the leader, I'm going to see it tick first. What am I seeing? Pretty healthy volume trading at 500 contracts per price. That's normal for the 5-year. So that's not necessarily very indicative of it's going to continue to flow. That's like we're just in a normal market. Going to trade in this kind of a range, maybe. I'd expect us to kind of trade between here and here in the 10-year for now, until it consolidates a little bit. There is a little bit of a liquidity hole, but it's a really wide one, so you might see that consolidate a bit. How do I buy shares of your channel? I'll sell them to you. What's your bid? No shares in your channel. Maybe someday we'll start a fund though. You have, am I really efficient? You notice, so the issue that I have is that I'll see lots of information and I'll see all of the correlations, and sometimes those correlations don't matter, but I'll put them out there, and you know, that's not for everybody. Some people might find that a little grating after a while. But, you know, my approach is I want you to be successful. I want you to get better at this and understand this so that you can contribute back. It's totally selfish on my part. Part of my edge is running this stream, collecting information from you guys, and working together. So I want to get you to a certain level so that to where you can contribute. And we do watch the DOM and we understand a lot of things about the DOM, but we also very much watch the news and have things that will try and predict the flows. And then we'll see if we're seeing those come in here on the flows. So very interesting today. Strong selling, flattening. It's flattening considerably. I wish I understood why they were selling, because all of those numbers that came in seemed in line, right? Why is in line a sell? No, I don't think I'm going to take a trade today for us last, to be honest with you. If we do, it's probably not gonna be for another 45 minutes. So maybe in the 8 o'clock hour we might take one. But basically, we had this move by Dally, or off of Dally's comments. We've come up. We're starting to form a liquidity hole. If we're going to go, back down, they're probably going to wait and let the liquidity recover first. So the timing for it is not right. Eric Wallerstein quoting Williams. Along with our restrictive policy actions, financial conditions have tightened, driven in part by an increase in longer-term Treasury yields since the summer. While statistical models of Treasury yields generally attribute most of the increase to a rise in the term premium, financial market participants have expressed a wide range of views, with little conviction around any single explanation. We've talked about that so much, haven't we? That it's like there's a lot of reasons why this is moving, and the models just attribute it all to term premium. But who's out there going and saying, well, I need to be paid more for a 30-year? I think there's very few people actually doing that. The rising yields and the elevated volatility likely reflect heightened uncertainty about the outlook for the economy and future interest rates. So he's making so we might not be able to nail it down into any one particular thing, but overall, the general theme is more uncertainty, and that increases that term premium. That's an interesting comment. It's good to know that the people that over at the Federal Reserve are thinking here. Okay, where can you learn more about the DOM? So I have a video series about order flow in the DOM. So, we talk about this all the time, and I just kind of go watch that video, but let me give you a little overview of what's in that video series. Yeah, it's not a paid course. It's just a playlist on my channel. Hold on, I needed to blow, but it was good. My gosh. I probably should have turned the camera off for that one. That was gross. View your channel. That's where we want to go. Okay, so if you come to my channel and you scroll down, I have this Start Here playlist. So a lot of the stuff that's in this Start Here playlist are things like what makes a good trading computer, what software do I use, beginner mistakes, and videos I want to highlight. And then just below that, there's this order flow playlist. Okay. So order flow and DOM trading for beginners is primarily what is the kind of, how do you approach learning the DOM? Why do you approach it that way? And the basics of what are you actually looking at? So after this, you should be able to look on my screen and hear what I'm saying and understand what I'm saying in the situations I'm talking about, okay? The next video is about catching the edge and icebergs. So this is kind of like me sharing my experience about what happens with these kinds of unusual orders. Sometimes we give them more importance than we really should. But they're there and they kind of mess with our trading. So I talk about how we deal with that. Okay. Same with the large orders. Large orders, I really am talking about things that like I've noticed with it and stuff. Okay. Then we get into the capstone videos. So the stylized behavior of markets goes into statistically proven behaviors that you will see on the DOM and the market overall that are well proven by researchers at the top universities, like from peer-reviewed studies. Okay. So these are the kind of things that are like, when I know what the flow is going to be, I can then predict how that is going to affect the price based on these stylized behaviors. Okay. And then this last one is kind of helps us understand and explain why all of these things happen, and explain why our approach has to be more than just technical. Because basically, we need to be able to predict the flow coming in first. So 5 videos. These last 2 videos are the most important, but these first 3 videos are going to be the ones that help you understand what are we looking at when we look at the DOM, okay? Because what most people are going to do is they're going to say, okay, when I'm in here and I see absorption and then I see it backtick and I see all of this combination factors, that's when I try and go long or I try and go short. And I don't take that approach. My approach is I have some bias based on the flows that I know are going to come in today as to whether I want to go long or short. And then I'm waiting for the DOM to give me a tell that that's actually what's happening. For somebody to make a mistake and to show that actually somebody does need to buy a ton here and we're going to move up and whatnot. So that's how I do the approach, right? So 5 videos that should take like 90 minutes to watch. Less than that if you watch it at double speed. So oil is going crazy because of because OPEC is talking about supply cuts. So this is generally a buy here. They are pulling back. I suppose if I was doing oil, I could try and go long here. Let's just say that I just did it right there as I said that at 79.10. Sure. Even if I did it right there, I would have gotten... Actually, you know, can I even... Oh, I do have an order column on it. Well, now it's too late. We'll try an oil trade here for fun, since you guys wanted me to take a trade, and we're getting the stuff, and it does sound pretty bullish. Yahoo Finance. New York Fed President John Williams says Fed's job is not nearly done. We are at or near the peak level of the target range for the federal funds rate. Just a little bit further. Come on. Well, I'm not liking what I'm seeing right there, but we might still be okay. Seems like that the higher oil prices may be pushing the treasuries down. Ah, there we go. Ooh, this is looking good. So I would not recommend trading naked, but I tend to not have like a hard stop put out there simply because I don't want people on the stream to be trying to like snipe my positions. That can happen. But there, I definitely have like a mental level at where I'm gonna get out, right? Probably for trading oil, I should probably have it out there automatically, right? Because you can get screwed so hard in oil so quickly. But this is not a live trade. Just to be clear. I only put live trades in the micro 10-year right now. I trade super, super small. Look at that spread in the 10-year. Oh, that's right, because this is the last day of the month, huh? Yes, 30th is the last day of the month. So if I switch these, that means that we go to December, right? NYZ. Well, this is going to really kill my swing, my experimental swing trade in the ES, isn't it? So when I switch this to Z, the liquidity is pretty suspect over there as well. Let's try it in the 2-year. You know, something is that I wouldn't say the treasuries have been hit too hard today. I don't know if we're going to see more flow or not, but it does seem clear to me that the whole everything's hunky dory, interest rates are going to come down narrative took a really big hit today. It took a really big hit today because they did not react positively to the economic release, which I don't understand, but that's what happened. And then the Fed speakers came out and pushed back against this. And then on top of that, you've got oil going wild. So, yeah. What do you think I should do with oil here? Because it came back pretty quickly. It's pretty wildly volatile. I guess I might try another contract at 79 if I can. Oh, that was 7 hours ago. I guess maybe I don't. I guess there was a terrorist attack in Jerusalem. Whoa. Whoa, 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 whoa. Oh, that scared me. Holy shit. Man. Well, I don't think that given the liquidity over here in the micros that I can really take a live trade, but let me just come back over here to X really quick. Yeah, it's terrible. It actually is better in December though. Okay, so I will switch these over to Z. And even though this isn't live, I'm going to try and be keyed in here. Here's something about cryptocurrencies. Not that cryptocurrency is really moving today, though. Algeria has agreed to cut January oil output by an additional 50,000 barrels per day, says the energy minister. So that is a confirmation, I guess, of the earlier news story about oil. Looks like at the moment they're having a little bit of a tough time holding that 79, though. And we do have, oh, actually, that, ooh, okay. I'm stewed. I'm so off today. Okay, Chicago PMI is at 745, but that one gets released 3 minutes early. That huge drop there was the PMI. So Chicago PMI must be good. Well, what's the number? So their expectation is 46. So if it's above 46, could it have been 51? If Chicago PMI is 51, that would be a huge problem. Here we go. We're about to find out. And we probably get like a secondary reaction. Holy shit. 55.8? Holy shit. Oh man, yeah, you sell that. You sell that. Crap. Wow. Okay, so this is going to make this trade in oil really interesting. So I think I'm going to try and swing it because I do think oil goes higher, but the S&P 500 selling off and everything turning risk off would probably hurts oil as well. So at exactly a time where you would think that oil should be buying because of the output cuts and everything, you're going to get some really bad economic data. Well, really bad, really good economic data. Oh my gosh. But good is bad. Wow, what a day. This is a very unfortunate. Well, okay, so that's a little bit better. Z. Now that I have everything in Z, there are some points where the spread is coming in enough that I could maybe execute. They're going to have to give me the right prices, though. This one that I did over here in the full treasury, though, seems to be going okay. I wasn't able to get filled with nearly as much. Maybe I shouldn't have taken the 2 contracts off. I should have only taken 1 and then I could have. Well, let's just kind of sit on it for a little bit. I think that I did some pretty good management. I'm happy that once I really saw stuff that was going on and I was forced into a trade, I was able to key in very quickly and get some stuff done. And so far it seems to be going okay. We'll keep an eye on this oil thing, though. I'm managing a lot more than I normally would. Okay, big bid at 25. Holds. They hit it, it holds. So it's a real order, probably. I think we need to change a setting here. I think I'm allowed to see 100 prices. Yeah, okay. There's the 2K MBO in it, net 25. That makes it even more interesting, doesn't it? It's all one guy. If I had taken a trade, by the time I'd gotten everything set up over here, the prices that I would have been able to get here in the 10-year are, you know, it hasn't moved too much from. So I think that I can chill out on that one. Okay, so interesting. We're getting a little bit of iceberging in volume at 25.5. It ticks down. We'll see now if they hit into that big order. It may be possible that he raised his bid and got filled there, because like, look, the bid is kind of returning to like the neutral amount. It kind of looks like there's still something there. Nobody's hitting him. Okay, there's a big collision there at 25. They filled it. So this sets up a very interesting situation for us, because there's definitely some selling out there. And I think reason for this to continue to go lower, but a lot just transacted there at 25. So I think that market makers are going to starting to get a little flighty. It's not super strong yet, but they are going to start to be a little more cautious. This area, 25 half, probably becomes a magnet. I'm going to recenter it there. So we'll see if they're willing to push it further here now at this point, or if it just kind of settles there for a bit. I'm guessing that it's going to settle there for a bit, and that then a little bit later we get a further push down. It's kind of funny when I was talking about that. When that all happened, I was reading the news about there was a Hamas shooting that killed 3 in Jerusalem. So the market wasn't reacting to that. That news has been out for about 6 hours. Now, they were reacting to Chicago PMI. Chicago PMI 55.8 versus 46 is a really wild outlier that I think could potentially on its own upend the entire soft landing narrative. I mean, it wouldn't upend it on its own, but could be a harbinger of more data to come that's a little bit more bullish, and could pose a problem for current monetary policy plans. So here's what's going on. I've been studying this for a long time, and I think I understand what this dynamic is now. So, because one of the things that you've been seeing is that we've tightened interest rates and the market hasn't really responded. What's with that, right? Well, what's happening is the Biden administration is doing a lot of deficit spending. Like, the government is spending a lot of money right now. So what's happening is government is absorbing wealth at the expense of the private sector, essentially. So that's why manufacturing is super, super poor. Services are doing okay, and like people in government positions, that's where all of the money is going. So when you look at GDP numbers and things like that, it looks like great, like 5% yesterday, right? But then you talk to people and it's not. And why is that? It's because regular people aren't feeling that, because it's all coming to the government at the expense of the private sector. So average people that aren't involved with the government aren't feeling that wealth come in, because they're not getting anything. They're just feeling squeezed, right? So you're squeezing over here on interest rates, and at the same time, you're stimulating the economy. At some point, I think what happens is, because you're stimulating the economy with the government, it will make it very difficult for the interest rates to go down. And so I'm at this point very skeptical of the soft landing narrative. I think that what you're going to get instead is a period at the beginning of next year where it seems like we're getting the soft landing, and then after that things will fall apart because the interest rates won't be able to drop. And this Chicago PMI being strong is maybe one of those first signs that you're going to have a hard time getting inflation back to target. Okay, well, they're back at my average cost basis here in ZN. I don't think I want to add at that price. If it comes back up a little bit higher, maybe I'll add. Over here in oil, now this is not one that I normally trade, so I don't know my normal rule, because normally if it was $1,000, I'd be getting out of it, right? But I think you're getting enough volatility here in oil. I'm gonna just I'm gonna give it some room and let it do its thing. It's in a different sim account than everything else anyways, so I can make mistakes over in this one if I need, part of the learning process. But I thought, oh, I didn't have that checked. I thought that I took it in mini CL, but I guess I didn't. So let's just pretend that everything is less. So it's actually a loss of $45. We're fine. We're fine. So let's go back through what do we have here today? What are the flows that we've had? Well, first we had some news about PCE and initial job claims that almost all came in line with expectations, but that the market decided to sell based on. Then we have news about oil output cuts that the OPEC is going to reduce oil output by 50,000 barrels a day. Then we got some Fed speakers coming in, pushing back against the bullish, dovish commentary that we got on Tuesday, suggesting today's commentary suggesting that, it could still be some time before we reduce interest rates and that the Federal Reserve is going to be very vigilant here. And then lastly, we got the Chicago PMI, which was expected to be a contraction, and it was a pretty big beat at 55.8. So that's 4 different things that are all sell flows for the treasuries here. You have seen pretty significant amount of flow short here. It's been about almost 60,000 contracts through the whole thing. So the market actually absorbed a lot. This is not as big of a move as, like, if I come back to this, you would expect us to, come be all the way back at 109.080 to just retrace this whole big long day right here, right? Well, They absorbed it. But I think that the news that we got here today is more significant than this, and it may continue to just sell into the weekend. This is a pretty strong head fake. Now in oil, we got something that is objectively bullish. Just to be clear, this is objectively bullish. We've already had quite a bit of rise over the day, though. I think, though, that they're going range bound here because the S&P 500 is kind of turning risk off. And so if the economy is going to be weaker, then there isn't going to be as much demand for oil. And that kind of counteracts the flow selling that we're getting in oil. But if oil does go higher, that's probably going to continue to put pressure on the treasuries. And in the S&P 500, the thing that we've got to keep in mind there is that we are in a short volatility regime. So they're going to be very, very difficult to dislodge, right? It's going to stay around this 45.60, 45.50 area unless they really make significant headway and the hedgers, it breaks. But we're not anywhere near close to that yet. And that's why you're seeing the S&P 500. When we come back over to our main chart, the just above me here, you can see it's kind of flipping back up. So see, if you were only looking at a chart and you were only looking at the size of the moves on the charts and comparing it to past moves, you would kind of think that everything that's going on today is trivial nothing burger. But I think that we're getting some pretty significant stuff. Okay, so now we're getting pending home sales, and we got a reading of -1.5 versus an expected change to decline of -0.2. So that is also bad for treasuries. That new home sales was better than anticipated. So I don't know if we'll get paid on these two positions here, but we are in a situation where I want to be exposed. And I would totally be doing it over here in the micros if the spread wasn't so awful. I feel pretty engaged, even though I want to continue talking about Elon Musk. I guess my thought where I was going with the Elon Musk thing was I feel like I need to try harder at Twitter. I don't know what I'm going to do, but I feel like I need to try harder. Okay, so let's just remember that the big orders in the treasuries were at 25 half. So we just got a tick down there that looked a little significant, but that is just coming back to the volume node first. If they can start to push below that without much resistance, then things could get a little spicy. But I think for now, they're going to be a little bit calmer. I was kind of looking for them to extend above 26 half, to try and add more contracts, but I don't think that that's going to happen. So I think I would just let this run. Well, when I'm watching this oil, one of the things that I'm thinking about here is this is crazy volatile. If this is the only time that I'm going to trade oil is when it's like this, that's probably not a good idea for me. You know, this actually reminds me very much of the last time I tried trading oil and I got screwed, right? S&P 500 are returning down towards those lows. I'm seeing a little bit of absorption at 45.5 though. 40, why did I say 45.5? 45.55. I don't know. I kind of feel like if I were to buy at 45.55, that's kind of like, you know, trying to grab the hot potato. Don't know if that one's a good idea. Okay, so just to reiterate the news on the oil, it was OPEC agrees on a 1 million barrel per day additional oil supply cut alongside the extension of the Saudis' 1 million barrel per day cut. You reversed, you went long in the treasury? I suppose if you're just trying to take the swings, I think that there's probably more selling to come today. Even though, I mean, they did sell a lot. I don't know. The thing that I don't like about my positions right now is that I feel pretty good about these over like, let's say I think I could probably hold these into Friday, if not into early next week. But I'm not sure if these two positions are going to look too good in like 5 minutes, you know? I think I might be trading this a little bit too high time frame, and I may be kind of getting suckered into a trap here. I guess the suckered into a trap here is really more a comment on oil. Really don't like that oil's not getting back above the 79 area. Holding that. So there you see in the micro 10-year, liquidity is a little better. Oh man, Graham Stephan, the truth about my coffee company, and he's holding up a piece of paper that says bankrupt. So does that mean that it went really bad? So I'm going to read a couple of stories here to try and figure out why they were selling initially off of like the initial economic numbers like the continuing jobless claims. So I'm going to first read this one. The Internal Revenue Service has addressed rumors that have emerged on social media claiming that a fourth round of stimulus checks will automatically go out to residents in 10 states on November 30th. The rumor began after the IRS revealed on November 17th that some Americans who were eligible to receive pandemic-era stimulus checks but didn't apply for them could still get money by filing amended returns. Okay. So then there was a media story contradicting that, saying that that's not true. But you may still be able to get a stimulus fund if you didn't get them before. That's cool. Okay. Fed's favorite inflation indicator slides the 30-month lows as the savings rate ticks higher. One of the Fed's favorite inflation indicators, the core PCE price indicator price. The core PCE deflator fell to 3.5% year over year in October, down from 3.7% in September. Headline PCE tumbled to 3% year over year. Even more focused is the Fed's view on services inflation ex-shelter, and the PCE equivalent shows that it has broken down from its, quote, sticky levels to its lowest since March 2021. The goods sector saw deflation in October, negative 0.1% month over month, biggest month over month decline since December of 2022, while services slowed to positive 0.15 month over month. Both income and spending slowed on a month over month basis. Income growth at 4.5% year over year is the slowest since December 22, and spending growth at 5.3% year over year is the slowest since February 2021. But government wage growth continued to accelerate at a record pace. The savings rate ticked up to 3.8% of DPI in October, yet another reversion with September's rate pulled up from 3.4 to 3.7. Is the consumer finally pulling back, or just reaching the limit on every source of credit? Asks Zero Hedge. So that is all, in terms of bad is good and all of that, seems like that data is all fine and that the market would be okay with it if not rally. But we did sell. Now let's read about continuing jobless claims. After last week's surge in NSA initial claims, this week saw that completely erased as SA initial claims edged higher. The NSA drop was driven by a plunge in California claims, which reversed the prior week's huge jump in NSA claims in California. That's not seasonally adjusted is what NSA means. But continuing claims jumped back above 1.9 million for the first time since November 2021. While continuing seasonally adjusted claims jumped, not seasonally adjusted claims plunged. They were completely decoupled from each other. And it's going to get worse, as Goldman reminds us that ongoing seasonal distortions have increasingly weighed on the level of continuing claims over the last 6 months. And we now expect that the reversal of those distortions could exert a cumulative boost of 375,000 to the level of continuing claims between now and March. So we're going to need more seasonal. Okay, so perhaps the reason that they sold on that initial news was that the headline seasonally adjusted number was in line with expectations. Well, when you look at the non-seasonally adjusted numbers, it looks like that the jobless claims are not as good as it might appear, and that might have driven some of the selling. Oil reserve in Cushing, Oklahoma has an effect on the oil markets. Oil tanks up there have float tops on them, and you can see the amount of product stored in them from satellite images. That is true. I've heard about that. That's like a alternative data thing that some people have been using or looking at. But I mean, people are already looking at that. I think they have for years. The mover today is definitely this OPEC drama that's been going on all week, right? But if the market all of the sudden decides that actually we're moving into a recession, that's going to change the picture really quickly, right? So, I don't know what to make of it 100%. I'm definitely was able to take advantage of this volatility here in oil, and it is looking better. So now they would really, really have to push down there for me to take a loss on this. But I may, if I don't think I'm getting another chance, so I'm not going to put an order in right now. But let's just kind of keep an eye on it. Here in the treasuries, they are pushing up a little bit higher still. There's a big iceberg at 28, so it seems like somebody doesn't want me to get filled at 28.5. That's okay. I think what you're seeing in the treasuries here is that the direction is going to continue to be lower. But you're gonna see pretty steep pullbacks, and it's gonna be really slow because it looks to me like the treasuries are kind of having, they're coming into the extent of their impact. They're having trouble continuing to push lower. Basically, you would need a lot more aggressive market orders to push the treasury considerably lower at this point. They've already sold a net 60,000, 50,000 contracts on the session. Okay, well, I didn't get my fill. It came back to 26.5. I'm going to cancel that order because, if they get through that iceberg a second time, I might need to reassess things. So, it was a good try, though. I actually had that spot picked pretty good. Too good. FINRA fines Bank of America Securities $24 million for Treasuries spoofing. Oh, really? That's coming from Discord. Sorry, I can't tell who's saying what in Discord because it shortens the names. Oh, actually, no, it's not shortening their name. Their name is just a ... Let's see here. Am I seeing? I don't think I'm seeing that on Twitter. Israeli military says 2 Gaza hostages have been handed over to its forces adjacent to Gaza Strip fence. That's odd. Because I thought that they were, not able to make a deal again. Oh, okay. Let's see if I can find a source on that spoofing. I think it would be... No, it's not giving me that. Nah, not seeing it yet. Maybe we'll get this. They would just need to wait, and the story will get out everywhere. Activist investor Nelson Peltz seeks 2 seats on the Disney board. Love it. I'd like to get in on that. Oh, I wonder what is this website called? Have I ever talked about this with you guys? Hold on here. I have it saved on my phone. Don't I? I don't. I closed it. There was this website that was basically like to... Man, how do I find it? Maybe you guys have heard of it. Basically, you go there and there's like a list of... You can start a campaign and contribute money to buying and selling the stock for that campaign. I thought I... I'm gonna find it. I'm gonna find it. It wasn't Tulip Share. I'm getting some favorable excursion here in the treasuries. They're not breaking lows yet, though. Well, Tulip Share is a place. Oh, I'm so frustrated that I can't find what this was because I remember the name of it being so simple. And like, oh, I would remember that, and I'm not. Oh, are we not? Oh, yeah, we are. Okay. I was like, are we not getting the music? I was just looking at it wrong. I'm going to keep searching. Well, let's read here. Ex-CEO Linda Yaccarino addressed the explicit comments Elon Musk hurled at investors during what she called a wide-ranging and candid interview with CNBC's Andrew Ross Sorkin at the 2023 Dealbook Summit in New York on Wednesday. If somebody's going to try and blackmail me with advertising, blackmail me with money, go F yourself, go F yourself. Is that clear? Yaccarino described Musk's comments as an explicit point of view about our position. We're a platform that allows people to make their own decisions, Yaccarino wrote on X. Oh, I'm not following them. Formerly known as Twitter, late Wednesday night. And here's my perspective when it comes to advertising. X is standing at a unique and amazing intersection of free speech and Main Street. And the X community is powerful and is here to welcome you to our partners who believe in our meaningful work. Thank you. Okay. Yeah, I should be following her. Activist investor Nelson Peltz and his firm Trian Partners are seeking 2 seats on Disney's board, CNBC reported Thursday, setting the stage for a proxy fight. The news came the morning after Disney added Morgan Stanley CEO James Gorman and former Sky TV boss Jeremy Darroch to its board, a move widely seen as a bid to fend off a potential challenge from Peltz. The activist investor had been waiting to see what happened with the Disney's earnings report earlier this month to decide whether to make a move, CNBC previously reported. Trian oversees more than $2 billion in Disney shares that belong to former Disney executive Ike Perlmutter, a critic of Disney chief Bob Iger. Disney shares are up about 6% this year, far underperforming the S&P 500 for this developing story. Check back for updates, blah, blah, blah. Okay, so I don't know a whole lot about this guy. Let's read about him. Chairman of the board of directors of Wendy's, really? Is he on Twitter, maybe? It doesn't look like it. Still thinking about this website I saw. I think the problem is that these guys aren't pushing it with the term activist investor. I just can't think of how I would search for this company, find it now. Okay, so we had a little bit of a move down, but it was pretty brief. Oil's coming back down here. I think I'm going to try it again. Croup. That's what it is. Ah. Yes. Yes. Oh, you know what? I know what the problem is. Hmm. Here it is. So see, said I didn't have an account. I'm just gonna say I'm not ready yet. Yeah. I want to explore first. Sure. Okay. So can you like search? So these are like campaigns. They're like, here, look, investigate Amazon's alleged union busting. But is there a Disney one? I want to see a Disney one. Really? No Disney? Hold on. All campaigns trending. Search. Yes. Oh, well, there's people commenting on stuff. Discussion. Okay. So, like, Oh, maybe if you verify your shares, you can see one. I don't know. Maybe I can try and do that now. They use played, which I hate. It never works. What? Well, that don't make much sense. They don't actually have, so probably the best broker for you to do this sort of thing from, they don't support. There's Fidelity Bank, but not. Hmm. I'm going to try this one more time. Hello, Jiwi. How much does one contract on oil cost? A lot. It was like thousands of dollars in merchant for that one. Well, it looks like my order got filled and they've dumped like way further. 2 months ago. Fidelity is no longer supported by a third-party linking provider. Why does Plaid suck so much? Explain this to me. Yeah, okay, gotcha. So they're saying I would have to take a picture. So if I click, I want to connect the brokerage manually, it says take a screenshot of your portfolio and email the screenshot to verify@troop.com. So I guess after the stream, I'll do that. And then after I've done that, maybe I'll be able to create campaigns. So I want to see, I would love to see a few things at this moment in life would make me more happy than an activist investor fight at Disney. Dude, I don't know how Plaid got like its tentacles everywhere into the industry, but when I find out that a service is using Plaid, I just don't. I walk away. So I spent so much of the earlier part of this month looking for a budgeting app. So right now you have Mint, and they want to shut Mint down and kind of bundle it together with their credit score app. And while it's not like completely going away, it's not going to have the same features as Mint, and it's some of the features that I care about. So I went about looking for a replacement app. And if you go and you search for it, you get a lot of suggestions. But most of the suggestions that people talk about suck. So like one that I see a lot is you need a budget. You need a budget doesn't even let you connect to your bank account. You have to put in all of your transaction manually. Who's going to do that? Like the whole reason why I need an app like that is because my finances have become too complicated for me to be able to manage it all by hand. It would be a huge time sink to do that, right? I need something that goes into the bank account and looks at, categorizes things for me, basically. So I tried basically everything. Some of them, they only have an iPhone app. Like, you don't have a desktop app. I can't stand that. Just one, because you must be a lazy developer. You must be a lazy company. You can't get a desktop app. I would make the desktop app first. But then second of all, like for something like finances, it is complicated enough that I do kind of need to be able to sit at a computer and do it sometimes. So unacceptable if it doesn't have a desktop app. And I looked and I looked and I looked, and eventually what I settled on was Quicken. So Quicken, like QuickBooks, they have an app like this called Simplify, and it actually just absolutely beat the pants out of everything else that I had seen. It has one of the things that I think is really cool is it has this way to make like these dashboards of sorts. So you can come in and you can create a filter, and it will then monitor that filter. So you can come in and you can say, I want a filter that shows me how much money has been spent on Amazon this month, because my wife buys a lot of stuff through Amazon, right? I can just do that. And then when I go to that screen, it shows me that along with all of these other categories that I've set up. I haven't seen any other app that can do that. And it has tags. So I can like individually tag and even automatically apply tags to certain things, right? And then look and do searches on things by tags. So that gives you like ultimate functionality, right? You can do literally anything you want with tags. Well, the bank tells you, I can go into my bank and it will show me how much money is in the account and all of the transactions, but it doesn't like categorize things for me, no. And that's the thing, is that I need to be able to, the other thing that gets complicated is like, I get paid on a 2-week basis now, and bills aren't always exactly on the same day every month, you know, because you have to factor in things like weekends and stuff like this. So in this app, you can put the bills in there, and it will give you a schedule. It'll tell you which bills are coming up and what's, you know, so that I can come in and I can say, okay, I cannot buy this thing yet because there's this, and this bill that are going to come in before the next paycheck first. Right. So, but the Quicken Simplify app, it is, you do have to pay for it. I think it was, I paid like a year and it was like $100. It's like $6 a month or something like that. But it's been great. I love it. And I think you can export the data too, I think. But the key thing is that it will categorize it for you, right? You go to a new place, it automatically detects that, oh, this is probably just shopping. This probably goes under the category of shopping. Well, when you're looking over there in oil, you can see just how quickly things can go south for you in oil, huh? Because for whatever reason, they are now lower than they were before all of this news came out. And this is not the first time I've seen this sort of a thing happen to me in oil, so I'm glad that I'm just doing it on an experimental account. Now, the treasuries, on the other hand, I think there is a possibility that they could come back up to 110 evens. But I think if they do that, I think that I'll do one contract here and do one contract here if they get up there. Because I think that we saw a lot of things today that will ultimately push interest rates higher. Okay, well, so I gotta kill the troop thing. Got 15 minutes left. Let's see if we can find something on this treasury spoofing. Here we go. U.S. regulators said on Thursday it fined Bank of America $24 million for engaging in more than 700 instances of spoofing through 2 former traders in the U.S. Treasuries and for related supervisory failures over more than 6 years. The Financial Industry Regulatory Authority said the unit, Bank of America Securities, did not admit or deny any wrongdoing in agreeing the fine. Well, I was hoping to get more than that. That confirms it, but I want to learn more about it. Octavia says TLT option positions show downside bias for tomorrow's close as well. Interesting. How do you interpret the initial balance in Forex and commodities? Well, so I think that there's a lot of strategies and forms of analysis that say, what does it do within the first 30 minutes or first hour? And then you make all of your decisions based off of that. I don't really care about that kind of stuff. What I do is when I come in early in the morning, I pull up a chart and I just make sure I understand what all of these moves were, right? Like yesterday, we started out pretty good in the S&P 500 and they sold all day. And now today, they kind of did the same thing. They were rising into the news, but then since the news that everything has been negative. But when I come into the treasuries, well, I mean, obviously the treasuries are down, but it feels limited in the treasuries. Feels like they could go double what they did. but that's the typical thing in the Treasury. So, and that's about as far as I go into it. Was there news overnight that moved it? Where are we relative to yesterday? Do we see anything that kind of tells me what the overall market sentiment is? That sort of a thing. Well, the S&P 500 is right on the edge there. I wonder if we're going to get a little bit of a push lower before we end here today. So I'm watching this oil, and it does look like they've at least kind of found a bottom there in oil for now. It is still up on the day, and I mean up big. But, I'm kind of wondering here, okay, if we keep this on as a swing trade, how long will it take to get back up there? Because in oil, that can be a long time, right? I may have just gotten, into a really bad swing trade. It takes you a couple of times fall into those traps to remind yourself of those things. But this is almost exactly what happened in oil, where it was like everything was in line for oil to go higher, and that was exactly when it fell back. And then later it went skyrocketing, but long after I had given up on the trade. Now, in the treasuries here, I'm not seeing a whole lot of activity, to be honest with you. Kind of looks like there's a slow bubble up as the majority of the volume and the trading is done for today. So I'm going to keep that one on for a swing trade as well, but that one might not actually turn out for me until tomorrow as well. Yeah, they might just be at 27.5 until I'm done, at least. It's kind of what it's looking like right now. Well, there was an attempted uptick there that looks like it. Okay, it eventually did hold. In fact, extended there. Interesting. I was going to say, something definitely disrupted the liquidity there. Even though they didn't tick up, but they did eventually tick up. Man, my mind is all over the place this morning. I'm thinking about this video I watched with Nassim Taleb yesterday. It was a video I had seen before, but it was good to watch it again. And he was talking about how you can't generalize from the general to the particular and so forth. And like the example that he gave, I thought was just so effing hilarious. He said that the average human has one testicle and one breast. It's like, yes, that's perfect example of how averages aren't really useful in some things, right? I was just thinking about that joke again. I thought it was so funny. Ooh, federal judge orders FBI to release Seth Rich's laptop? Yeah, they'll release it and we'll find that it's been wiped. Okay, just before we go, let's read what Zero Hedge has to say about Chicago PMI. Title, WTF chart of the day, Chicago PMI beats expectations by 13 standard deviations. Wow, yeah, when I read that number, I was like, what the heck? Soft survey data has been serially disappointing in recent weeks, catching down to the reality of hard data. So, it was not surprising that analysts forecast for this morning's Chicago PMI to remain in contraction at 46, up very modestly from 44 in October. However, when the actual print hit, many traders double-taked as the 55.8 print was a 13 standard deviation beat to expectations. It's one of the biggest beats in the series history, and one of the biggest month-over-month increases in the series history. Yes, it is. This is the first reading above 50 since August of 2022, so in more than a year. Under the hood, 6 of the components increased month-over-month. Prices paid rose at a slower pace, signaling expansion. New orders rose and the direction reversed, signaling expansion. Employment rose at a faster pace, signaling expansion. Inventories rose and the direction reversed, signaling expansion. Supplier deliveries rose and the direction reversed, signaling expansion. Production rose and the direction reversed, signaling expansion. And order backlogs fell at a slower pace, signaling contraction. Finally, we note, some have suggested this beat is due to the return of auto workers after the lengthy strikes. Could be, but we ask, were the analysts who consensus expectations were for contraction to continue unaware that the strike was over? Question mark. Interesting. Yeah, how did the analysts get that one so wrong is one of the first questions that we should always ask. Or it could be, I don't think that they're insinuating that this number is being goal-seeked or something like that, but it is definitely a hit to what we're looking at, So, that number is very interesting. The market did not react to it quite as strongly as I did they? Like, there was a big sell when it happened, but, we've basically where we were before all of that. So, the market seems to be discounting it for now. I'm seeing a little move in the dollar here after having been in a range for quite some time. They are now moving back towards that 103 even area. Copper's on a pretty good rise since the top of the hour too. And oil pushes even lower, 277. So does this is this where we double down? There could be further downsides, so polite way to describe an analyst's wisdom has been cleansing you, but you have always been faster. I don't know. When it comes to economic numbers, I do always find it odd when the number beats the analyst's expectations by so much. I'm kind of like, there shouldn't be that wide of a gap, but happens all the time, so. All right, guys. Well, today's stream title should be Chicago PMI shock expansion. That was the biggest news. Lots going on in my head. I don't think, tomorrow's probably not going to be the best. Well, we'll hold these, but I'm hoping maybe some more opportunities for me next week. It looks like we're going to end up with only one trade, live trade, but we did make money from it, so this is good. But I don't think that they're done here, so I think we could see more activity next week. And also got to remember that it will be non-farms next week, so. In the meantime,